Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will. How are you?
I'm doing well, and it looks like you're back in your office and locked and loaded there at the University of Missouri.
That's right. That's right. Thanks for all of our listeners that had to put up with my childhood bedroom last week, I guess, as I was home helping with wheat harvest. But back to the old grind today.
Back to where you don't have John Deere sprawled throughout the area,
We don't know they were John Deere's. It was
All
just
right.
great.
Okay, fair enough, fair enough. But Ben, looking at the markets this week, we saw a lot of dramatic adjustments and a lot of dramatic swings. For looking at just like the week's changes, it doesn't seem like a lot, but really coming into today, we saw a lot of movement. So can you just give me, before we dive into those price changes, a brief overview of what's really been going on?
Yeah, and thanks for teeing me up there. I do appreciate it. As a reminder to our viewers, we capped the weekly price changes, or we stopped the weekly price changes Monday afternoon. If we were to include last night's overnight trade into Tuesday, as we start the trading day here on Tuesday, we'd see pretty widespread losses across all the commodities. Large deterioration in markets overnight. So July corn was down 5 cents on the week, not including last night, to 637. December corn down 6 cents to 588. July soybeans up 52 cents to 1521. November soybeans down 12 cents to 1323. Soybean oil up 42 cents to 59.51. Soybean meal down $3.50 to $414 per short ton. Old crop wheat for July here up 43 cents to 724. New crop 24 wheat up 42 cents to 772. And then that West Texas intermediate crude oil down just about $2 a barrel to trade below $70 again.
So, Ben, I really want to start off today's discussion on the EPA's announcement that the EPA's released renewable volume obligations for the next 3 years. And it really pushed the soybean complex, especially soybean oil prices, downward. So really not, I guess, a positive on the overall demand front there. Can you talk about what this might mean longer term? Because this is a 3-year obligation.
Yeah, absolutely. So we did finally get those renewable volume obligations for 23, 24, and 25. The reason I say we finally got them is it took a while, delayed. Finally, through a court order, the EPA was required to release them the middle of this month. They were then granted a 1-week extension. So we finally got those volumes. This is kind of notable. This is a notable release in the fact that this is the first time EPA has been allowed to set these volumes instead of being congressionally set within the law from 2007. And so this was notable. It was also the first time that we received 3 years worth of volume obligations at the same time. This was something that really a lot of industry partners, both ag and non-ag, were asking for to provide some certainty within the market. I would say that goes both ways. It can cut both ways. Having 3 years of certainty, if it goes your way, is very exciting because it means you don't have to defend those gains for a few years. If they don't go your way, you have to wait 3 years before you can kind of get some of that gains back, unless you find other mechanisms. So, the renewable volume obligations came out. They were lower than what many in the ag community had hoped for. Two notable ones on the ethanol side. The ethanol mandate, or the ethanol volumes, were capped at 15 billion gallons. That was a little bit of a shock to renewable fuels producers because the proposed rule back in December of this year included increases in that complex. So they didn't get any of those. And then on the biodiesel side, a little bit more of an increase in biodiesel or biomass-based diesel, but not certainly anywhere close to what many in the industry would want, but also probably not where the industry growth has been going the last, let's just say, 18 to 24 months, with all the growth and crush and expansion plans in renewable diesel. So that's what led the soybean oil complex sharply lower. It's rebounded a little bit, but limit down on the day when the renewable volume obligations came out.
All right, so Ben, trying to get a little bit of insight into maybe the thoughts on how the EPA came to the numbers that they did. They increased the blending, overall blending in 2023, but trimmed the 24 and 25 expectation, or from the expectations that they kind of set in December. So can you give me a little bit of insight between what's different now versus then?
Well, they would come out and say, or at least in their report, that there wasn't a whole lot of market changes, but they certainly did recognize the potential growth within the industry. I'll go back to what I said just a few minutes ago, if I can kind of recap that just a little bit. They recognized the growth, but then the industry would say they didn't fully take into account the growth. They didn't, they just recognized it. They didn't do anything with it. And so I think that's part of the chicken and the egg problem here, at least on the biomass-based diesel side, is, the EPA is saying, there's not the feedstock to grow this out. The industry is saying there is the feedstock because it's not going to all come from soybean meal or soybean oil produced here in the United States. Some of it's going to be import, some of it's going to be other sources of feedstock. And so we can build that out, right? Like that's kind of the argument. On the other side of the aisle is, folks that don't want to see a mandate for refiners and blending. There's certainly, a weird coalition, and I don't mean weird in any negative way. It's just partners that normally wouldn't be together in any sort of way, but find themselves on the same side of this debate with renewable volume obligations, with oil refiners, and in some cases environmentalists that are looking for a ramp up in electric vehicles. And so it's a weird policy. I think as we look ahead, what does this mean going forward? It probably tampers some of the expectations for renewable diesel. And I'm using the word probably. Many in the industry would say it absolutely tampers renewable diesel. I'm going to say probably because I do actually see growth in that industry. And we've already seen some investments that are going to come online. It probably stops some future investments in renewable diesel facilities. And so we don't see this build out nearly as robust as what many in the industry would have said a year ago. Is kind of the short version of this.
So, this is obviously a topic that has a lot of depth to it, and we can stick on it all day. But I also want to get a little bit of discussion on grain stocks and the acreage reports coming out from USDA on Friday. Ben, what are your early, or maybe not early, but your expectations ahead of this report?
Yeah, so I'm going to use ending stocks this year as of June 1 compared to ending stocks last year at June 1, okay? And so broadly down across the board, I'm looking for smaller stocks on hand of June 1st this year compared to last year. On the corn side, that could be as much as 100 million bushels. On the soybean side, maybe 150 million bushels, given some of the export numbers that we saw this year. Wheat, it's really a production story, decreased production primarily in the hard red winter wheat region. That's kind of pulling down those stocks. I'm going to go out on a limb here. If we see a surprise Friday, my guess is that it comes in these stocks numbers. And why do I say that? Well, one, I think we've got some interesting dynamics happening in the Western Corn Belt related to wheat feed use. That has been a constant theme this year, where USDA continuously underestimates corn used for feed and overestimates wheat used for feed. There's not a lot of hard red winter wheat out there to feed. And so as a result, especially on June 1st. And so as a result, we maybe have seen a little bit stronger corn feed use as a result of that. On the acreage side, if I can switch to the acreage here for just a second, I would not be surprised to see a corn acreage number that comes in just slightly below the 92 million acres that producers indicated they would plant back in March. Now, a lot of people are sitting there saying, Ben, it was really wet in the upper plains. They didn't get a lot of that planted to corn. We've had drought concerns across the country. Maybe some of that corn didn't get, maybe it just didn't mature, right? Or it isn't growing. I really do feel like there's a pretty good corn, or I think the corn crop is there, maybe not fully 92 million bushels, but maybe like 91.5 to 91.8 million bushels, or million acres, which would certainly indicate that, we can take a little bit of a hit on the yield side due to drought before we really start to see prices really start to spike.
So Ben, you talked about, or you kind of teased the drought pressure right there. We did get some recent rainfall in the northwestern areas of the Midwest, and trying to see how that might play into the market moving forward, maybe relieving a slight drought pressure, but still a big concern, obviously. So as we kind of move forward, how do you expect weather to continue playing a factor within the market complex?
Well, it's becoming a bigger and bigger, market mover the closer we get to the 4th of July. That's kind of the psychological threshold there. I will say that there's quite a bit of corn that's starting to pollinate now and has been pollinating for the last couple of days. So the rains this weekend, if they fell and over corn that's pollinating, that was very beneficial. There's some good looking corn across the country. There's also some pretty poor looking corn across the country. I think we're going to have a situation to where our subsoil moistures and really that very deep topsoil, or that organic matter at the top, is really going to play a role in areas where we produce a lot of corn. And this is going to sound kind of real simple, and I'm not trying to simplify this, just to say that we have more room for forgiveness in places like Illinois and Iowa because of that deep soil profile. That's an area that has been very dry. If it had been that dry in other parts of the country, we would be looking at a complete crop failure in those areas, I'm pretty sure. But
Thinking about recent history, maybe somewhere like the Western Corn Belt that we've seen.
Yeah, right. And so, but because it's falling in Illinois and in Iowa, yeah, we're probably dragging the national yield down, but it's not. I mean, they've got the soil profile to give a little bit more wiggle room. So there certainly are some pockets. I'm not trying to tease this out. There are some pockets where crop conditions are falling very fast. On the corn side, you look at Illinois. Illinois is 41 percentage points below their average. Missouri is well below their average. So we've got some areas where there's some rapidly declining, but rains over the next couple of weeks, if they do materialize, could really help that that corn as it really starts to pollinate broadly across the region.
So what I'm hearing, the headline is that you're happy that Iowa and Illinois are the ones that are suffering.
Oh no, I didn't say that. Yeah. My point really was like had that weather pattern materialized anywhere else, probably, maybe with the exception of southern Minnesota, we would be looking at a complete crop failure if that were to happen. But that dry pocket, yeah, it's bringing down the yield, but there's still potential to, I guess, if we get the rain to kind of materialize and produce maybe a 220 corn crop in some parts of Illinois, compared to 250, right? Like that's what we're talking about.
Gotcha. So Ben, as we're looking forward through the rest of this week, obviously we talked about some of the reports from USD on Friday, but what else should farmers and ranchers be paying attention to?
Yeah, so the big one there is Friday, with the grain stocks and acreage numbers. That'll probably refocus markets maybe a little bit back onto the new crop supply side a little bit. But demand here is what's kind of really starting to capture the market's attention once again. The other unique report this week is the second quarter hogs and pigs report that comes out Thursday afternoon at 2 o'clock.
Well, sounds good. Well, viewers, listeners, if you'd like to learn more about what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, it's always a pleasure having you on here and getting your information. Thank you for that. I'm Will Robinson on Brownfield.